Hey guys, absolutely monumental news about FTX. A tweet has just come out from the, I think, head of their venture arm, shows all the assets, liabilities, and some ways forward. So I want to go through that. Quick market update. Bitcoin at 17,300. Absolutely unbelievable timing on all of this. CPI came out yesterday. It surprised to the downside. The market absolutely ripped to the upside. Bitcoin would now be trading, in my opinion, at around 25,000 at this level if this didn't happen, right? So, what I've been saying is comfortable to get involved here. I think CPI is going to start to come down. It would be up here if we didn't have this FTX situation. In my opinion, ETH as well, maybe well over 2,000, right? More risk on in that market. I actually posted this in the crypto investor course, the private groups today, everyone in there. China is now easing COVID measures. The DYX strength has absolutely fallen off a cliff. Look at this. This is the dollar index. You can see the top here. It's just fallen right off a cliff, which is obviously bullish for assets like Bitcoin. Unbelievable timing that this happened, right? Biden and Xi also meeting. They're going to try and work out some plans, I'm sure. Russia has been pulling out in Kherson, right? Inflation, for me, in my opinion, is done as well, which is all great and bullish for equity markets. They've been having a great time the last few days. And then, FTX has obviously, mucked everything up in the crypto markets. The problem here as well is that many firms had money on FTX. Many altcoin treasuries for other businesses are on there, and so very tough time for crypto, and just the scrutiny on crypto is not very positive, of course, for right now. But CPI coming down and the dollar index coming off as well, at least there's a little bit of respite. Looks like things in the market are starting to turn, which we were all looking forward to, and unfortunately this specific thing is going to muck all of that up short term. This is a tweet from Zane Tackett, who is actually the head of institutional sales at FTX. This is obviously from the inside, so we get a clearer view of what's actually happening here. I have naught to say at this point. Here are two options, and interested to hear your thoughts. The two options are obviously bankruptcy. The second one is a token. What they mean by that is issuing a token that has a claim on a part of your assets, a massive haircut on any assets on FTX, but a liquidity to people that have some assets on there. A massive haircut though, right? But obviously, there's been other examples of this, for example, with Bitfinex, I think, where you get a token and, if the platform can actually start up again, obviously with new management, right? But if it can do that and actually start to make some revenues again, it could potentially, over the very long term, pay some of it back. So that is a potential option and probably preferred by most people. There are also assets right here as well that are illiquid. So as you can see, liabilities, these are not concrete, but he obviously works for FTX or did, and so would have a good idea. Liabilities, $8.8 billion in a hole. Absolutely incredible. Liquid assets, 900 million. Less liquid, 2 billion, and illiquid, 3.2 billion. Incredible. Illiquid is going to be extremely hard to sell. He's probably referring to private equity, which is not going to be valued at 3.2 billion. If you're a forced seller with private equity, expect a 90+% drawdown on that value. So I doubt they'll be able to get anywhere near that value for those equity investments. But here we are. He also gives some info on what balances FTX are still holding. Liquid assets would be things like dollars, yen, and DAI. Why has that not been sold off already to actually fund some assets there, right? Did they hold on to that for their own working capital or what? There's big questions about that. Less liquid, GBTC, that is the Grayscale Bitcoin trust that is absolutely finished. It's trading at a 40% discount, I believe, right now to the price of Bitcoin, and it is extremely illiquid. So almost impossible to actually get big amounts of capital out of that. And they're hoping for a Bitcoin ETF to actually transfer GBTC into a Bitcoin ETF. So when's that going to happen? That could be a few years, right? But potentially some value there. ETH, which I think is the Ethereum trust, again from Grayscale. That could be something that also would take a long time to get out. You'd have to wait for buyers in there. And then Solana, Yeah, so Solana's going to get trashed if they sell tons of their tokens, which they had a lot of. Less liquid may mean that there are some Sol tokens potentially locked up still as part of investments that might vest over various periods of time. Illiquid would be longer term equity investments. Like I said, equity investments means private equity, means that the 3.2 billion that they've assigned to that, or what is it, 2.66 billion? Yeah, that's more like 150, maybe 200 million, not billion. If you're lucky, if you want to get rid of illiquid private equity like that, you have to, essentially get some buyer who's obviously not going to pay what they're mark to market as right now. So potentially a token that represents a haircut on people's assets and then potentially could pay back some of the assets that they could liquidate over the long term. So that's where we are right now. As for trading and investing with crypto, Bitcoin is literally made for this, right? So Bitcoin is insurance against insolvency at the exchange level and at the nation state level. If nation states go insolvent, they print more money to pay off their debts, to debase their currency. Bitcoin insures against that. It also insures against blow-ups of exchanges like FTX. Make sure to use exchanges that have proof of reserves. Many have come out and said that they will give you proof of reserves, including BitGet, Binance, KuCoin, Huobi, and many others. Check my Twitter for a list of them who have all come out and said we either have or will soon to have proof of reserves, proving that they keep client assets segregated one for one. And that is the very least you should expect from an exchange. Twitter link in bio if you want to check that list as well. I'm James with MoneyDG. Cheers for watching, and I'll see you in the next one.